Hey everyone, it's Matt. So in this video, I wanted to discuss the topic of how trading is boring, but why this necessarily isn't a bad thing for us, especially if you want to be successful in the long term. So if you're scratching your head and thinking to yourself, well, why would trading need to be boring? I'll be answering that and many more questions related to this topic. So before I continue, just a quick reminder, if you guys find this content helpful, to help with the YouTube algorithm, be sure to drop a like. And if you're interested, you can check the links down in the description of this video as well, where you can join my free trading community or where you can join my elite community, where I have in-depth live streams every single weekday and where I also include additional guides, additional weekly market update videos, and much more. So if you're interested, then check it out. So when it comes to most of us, when we started trading, everything was brand new to us. So it didn't really matter what we were learning. Everything for the most part would excite us. So learning something as simple as support and resistance, or supply and demand, or learning what the forex market is or the crypto market, learning how to improve your trade entries, learning about reversals, all of those things would excite us a lot. And so for many beginners, trading is not going to be boring because for the most part, you're just building your overall foundation and you technically don't really know what you're doing until you get some experience under your belt. That's pretty self-explanatory. But now, eventually, most people reach a point where you've been trading for some time and you've probably done some back testing to figure out what your trading strategy is. And so eventually, this tends to happen for many traders who've been trading for a couple of months or a couple of years, where they start to get bored. And this is where they will look to spice things up in their trading, even if they have a trading plan that for the most part is pretty good and seems to work for them. They will still look to spice things up in their trading. Now, let me discuss why something like this isn't necessarily a good thing, right? So let's say that you have the simplest trader, and I'm just going to use a very simple example over here on the dollar CAD. Let's maybe go back to the 15 minutes. So let's say we have a trader that's a trend trader. So they wait for maybe the hourly market structure to display a trend for them. So let's assume that over the past couple of days, dollar CAD has been trending downwards. And so this is where their trading strategy tells them that the hourly market structure is in a trend. Drop down to the 15-minute chart, mark out different zones. So let's say you have one zone over here where you're looking for a break and retest setup. Wait for the break, wait for the confirmation, wait for the rejection, and this is where you short. So let's say this is one setup that they took, and this ended up being a winner. And the next setup that they took, let's say for the sake of this argument that they took one over here again. So they had the initial retracement, they took it again, but now they encountered a loss. So maybe their stop loss was too tight and they encountered a loss, but the trend ended up pushing in their direction. And so what will happen is, either due to experiencing a probable loss, or let's assume that they didn't experience a probable loss. So let's say that their trade ended up being a winner once again, and everything seemed to go right with these two trades. Well, now what happens is they start to get bored, right? So now let's say that they were playing it very safe with how much they've been risking over the past couple of months or couple of weeks. And so what you guys will find is that when something is boring, in many cases, it also ties into us naturally being a bit impatient. So these sort of go hand in hand when it comes to trading. And so if we continue with this example, right? Let's say someone is being very impatient and they want to enter a trade, right? Because they don't want to be bored. They don't want to sit on the sidelines. This is where this trader will either increase their risk or they will change their trading strategy completely. So if previously they were looking for break and retest setups, this is where they'll tell themselves, well, okay, now let me start going for reversal setups. So let me try to catch the bottom. So this is where they might buy over here, and what do you know, they experienced a loss. And then the trend kept pushing downwards again, and once again they're trying out a reversal setup, and let's say they experienced another loss. And so what happens is, when you're bored, right, this is typically when you won't follow your original trading plan, or like I previously said, you'll switch up how much you're risking. So you'll go against your rules. So a lot of this ties into your trading plan, where you'll go against your money management. So if previously this trader was risking, let's say 1% per trade, 1% over here, and they start to get impatient, they don't like the fact that they experienced a loss and they want to speed up their success in the markets, so they want to quickly flip their accounts. This is where for the next trade, they might increase it to 5%, because now it's more thrilling to be in a trade where the stakes are a bit higher, despite the fact that this isn't the best way to go about things in the long term. Now, I'm not saying that once you're an advanced trader, you can't eventually increase your risk under certain conditions. That's not what I'm implying at all. But what I am saying is that trading needs to be boring, because it means that you're following your trading plan. So the second that you start going outside of your plan. So let's say this trader that was initially a trend trader, but then they started going for reversals, or maybe if they were trading dollar CAD and they started getting bored, they told themselves, you know what, let's switch this up. Let's look at a completely different chart. Let's look at some exotic currency pair. This is where, let's say that they pull up the South African Rand. Let's go on this. And this is where, out of boredom, they'll tell themselves, well, I experienced a loss on dollar CAD. Let's try to trade this. Despite the fact that you don't have this back tested, and despite the fact that naturally this isn't something that you should be trading. So in many cases, when you're bored and you're looking for excitement and you're going outside of your trading plan, that's a bad sign, because in the long term, you need to follow your trading plan, which involves following your probable edge in order to be successful. You're trading something that is brand new because you're simply looking to get lucky, right? And when it comes to luck in trading, that's when it sort of ties into gambling. And if you're someone who's gambling in the markets, well, then you're not thinking long term, right? If you're looking to get lucky, well, then you're obviously not following a plan. Because when it comes to trading, we need to treat trading like a business. I find it funny that many people get into trading where they don't follow proper risk management, so they don't know how much they're risking, or they risk random amounts per trade. They don't treat it seriously like a business. But then when it comes to anything else in the world, whether you want to get involved in something like real estate or open up your shop, or basically anything else outside of trading, most people would understand that you need to treat trading like a business. And so trading needs to be boring, because that means that you're following your plan, right? If it's boring and you have a rule set that tells you, well, I'm gonna trade between 9 o'clock and 12 o'clock, I'm going to risk 1% per trade. My third rule tells me I'm only going to go for break and retest and continuation setups. And my fourth rule might tell me that I'm aiming for a 1 to 2 risk to reward or better. Now, obviously these rules can increase and get even more complex, but the whole point where I'm trying to get at with this is that when you are following your rules, which you have for a reason, because you back tested and found that these rules are the ones where in the long term will help you. If you are following your rules as a trader, that's going to be repetitive. And if it's repetitive, it does eventually get boring, but that's simply something that you need to do. But some people don't do this, right? And if you're guilty of this, it's totally fine. A lot of people do this at first before they learn the hard way, where once again, they'll throw up random risk percentages. They'll change up their trading strategies. So let's ignore this one. Let's say that after being bored, one day you decide that instead of trading 9 to 12, now you're suddenly going to trade from 12 to 5. And now instead of risking 1%, let's start risking 5%. And now instead of going for break and retest and continuation setups, let's start trading based off of an indicator that we've never used before. So let's say we put on the MACD and now we start trying out the MACD, etc., etc. Once things start getting boring and you start looking for an escape route, you're not really looking at trading as being a business. And if we think about this, if we relate this to any other business, would a business such as, let's say, a grocery shop suddenly change the hours at which they're open? Would they suddenly start selling furniture if they're a grocery store? Would they suddenly start marking up their prices for double the price that they normally sell their fruit at? Of course not, right? When it comes to the majority of businesses, you need to be strict with your rules. Now, that doesn't mean that you can't mix it up a little bit if something's not working. And that doesn't mean that as traders, once we're advanced traders, we can't expand our knowledge into other markets or trade other assets once we're comfortable with the ones that we're using. But of course, you're not changing your plan, right? You're sticking to the plan despite it being boring, because that's what's going to work in the long term, right? And so this is why we need to accept that trading is boring. But if you're continually switching up the rules, or maybe if you're trading under the influence, so if you're taking a bunch of drugs while trading because you want excitement and you're going all in, just full margin every single trade, well, now you're not treating it like a business. Instead, you're gambling. And when you gamble, that means that you're throwing risk management completely out of the window. And when risk management is out of the window, that's where you end up having a blown account or two. 90% of the time, you're waiting for the correct setup, and only 10% of the time or less are you actually executing a trade. What a lot of people think that trading is that you're continually clicking buy or sell and trading every single minute of any given day, which is completely false. So by treating trading like a business and understanding that it is boring, in the long term, you will have greater success by simply following your rules, even if it is repetitive. So I hope this video was helpful. Again, if you guys enjoyed it, be sure to drop a like. And as a reminder, you have links in the description to join my public trading community, or if you'd like to join my elite community to gain access to tons of additional perks, including the trade setups that I took for FOMC earlier today. Thanks for watching, guys. I'll speak to you in the next video.